The Roth 401k is a tax-free investment, but if you don't understand the rules on distributions, you could be smacked with some stiff taxes and penalties. In today's video, I'll be discussing how to navigate these sometimes tricky Roth 401k distribution rules so you don't get any surprises from the IRS. First, let's discuss what happens if you want to take a withdrawal from your Roth 401k pre-59.5. You can withdraw a sum equivalent to your contributions from a Roth 401k without taxes or penalties because Roth contributions are made with after-tax dollars. However, if you take any earnings out prior to 59.5, you would pay taxes and penalties. But this is where things do get a bit tricky. Any withdrawals prior to 59.5 have to be prorated between your non-taxable contributions and your taxable earnings. To figure out the portion of your withdrawal that is attributable to earnings, you have to multiply your withdrawal amount by the ratio of total account earnings to account balance. Here's an example. Let's say your Roth 401k account balance is made up of $60,000 in contributions and $40,000 in earnings. That means your earnings ratio is 40%. That's 40,000 divided by 100,000. In this case, a $10,000 withdrawal would include $4,000 in taxable earnings. This $4,000 would then be included in your gross annual income amount that gets reported to the IRS. You would also have to pay a 10% penalty on the $4,000 as well. So what's the total damage here? Well, let's say you're in the 22% marginal tax bracket. You'd pay $880 in tax on that $10,000 withdrawal and an additional $400 in penalty for a total of $1,280. So certainly not as liberal as the withdrawal rules that apply to a traditional Roth IRA. In a traditional Roth IRA, whatever you put in can be taken out, no questions asked, and certainly no taxes or penalties. Okay, now let's talk about the rules surrounding withdrawals once you reach 59.5. Remember, there are no penalties beyond the age of 59.5, so that means you can always take your principal out 100% tax-free once you hit that milestone. So the question becomes, at what point can you take the growth out post 59.5 100% tax-free? This can only happen once you've had your Roth 401k in place for at least 5 years. So here's an example. Let's say you started your Roth 401k at age 58 and you're now age 61. Let's also say that you've contributed $50,000 to your Roth 401k and that's grown to $70,000. Because you're over age 59.5, you can now withdraw all of your contributions 100% tax-free, but if you wanted to withdraw the $20,000 in growth, you'd have to pay a tax because 5 years have not yet elapsed since you made your first contribution to your Roth 401k. However, once you reach age 63, then you could take both your contributions and your growth out 100% tax-free. In short, distributions from Roth 401ks can be tricky, especially if you're planning on taking withdrawals prior to age 59.5. You're much better off not using your Roth 401k as an emergency fund and instead use a traditional, more liquid account for your short-term needs. Folks, my upcoming book, The Guru Gap, How America's Financial Gurus Are Leading You Astray and How to Get Back on Track, is now available for pre-order on Amazon. Take the opportunity to order your copy today. By the way, in the next 10 years, I'm looking to put 1 million Americans on the road to the 0% tax bracket. If you would like some help implementing a balanced, comprehensive approach to tax-free retirement that shields you from the impact of higher taxes down the road, head on over to davidmcknight.com and click on the Connect with an Advisor button. I'm happy to refer you to an advisor in the Power Zero network that has been trained, vetted, and qualified personally by me. If you're a financial professional and want to learn how to become a certified Power Zero advisor, head over to powerzero.com and opt into my free video series. And if you have any comments or questions, feel free to drop them into the comments section below. I'll respond to every single one of them personally. And don't forget to click like, subscribe, and the bell so you never miss a video. Folks, this is David McKnight. I look forward to seeing you on the next video.